Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 5th of April. Starting off with the FTSE 100, and here you can see that we've stalled in that range between around 7870 and just above 8,000. Obviously disappointing that as soon as the FTSE looked as though it was going to go over the top and make new record highs, the Dow, or at least the American markets, etc., have fallen back, but that's what we've been used to for the last 20 plus years. Maybe there will be another chance after the non-farm payrolls later today, but in the meantime, above 7870, looking for this market to head up to the top of that rising trend channel from back in December at 81.40. On the downside, if we do break down, hoping that we won't get anything lower than 77.90 or so, which was the initial March resistance. 50 and 200 day lines both rising, so that will help the cause to some extent. Moving along to the DAX, and here you can see that we've broken that neckline support there around 18,300, let's say, and below that the risk of testing the mid-March resistance 18,000, which is what we were expecting really. Below 18,000, the lowest at the moment would be the floor of that rising October trend channel, hopefully around the 17,800 level. But at this stage, that's the worst we're expecting, and hopefully we can turn from the right side of 18,000. Moving on to the Dow, and here I can see that broken everything here, so back below the 50-day moving average for the first time since the beginning of November, and below that 50-day line, currently at 38,800, there is the risk of a move down to 38,000, which was the February support for this market. RSI now well below neutral 50, and that would, I suppose, where we are in the low 40s suggests that 38,000 would have to be factored in here as the potential downside. Next up is Bitcoin, and here within that rising trend channel from January, which is relief, we managed to bounce twice really above the 50-day line. That's currently around 63,700, so while we're above that, relatively secure in our bullish stance, looking for 80,000 by the end of this month, obviously associated with the halving. If we do break down, then the worst at the moment is seen as being 60,000, and that would be basically testing the March support, which was twice tested during that month. RSI still just on the right side of neutral 50, which is a positive. Moving on to gold, which has been the star of the latest week. Here you can see that previous targets, the first one around 2200 hit, second one 2280, and the third one coming up at 2380, which is a late August resistance line projection. The view at the moment is that as long as we stay above 2280, we get up to 2380 by the end of this month. Moving along to the stocks, and not that many as you might expect. It's been a quiet week, and obviously the market on the downside. Here we've got the chance of Armadale Capital breaking out of the recent consolidation around 0.7 to 0.9, and then hitting the top of that broadening triangle from August as high as 1.2 pence by the end of next month or even sooner. Beacon is next, and here one of the stars of last year, I believe, from memory, but yeah, back in the summer. But here, interesting, it looks as though we're bumping along the bottom. We've broken recent neckline resistance, and the bottom of the gap down from February around 0.05, and above that looking to fill the gap up to 0.07. Best case here is that we have a full-blooded recovery up to the 0.11 area, which is the top of that broadening triangle from back in December, and we could see that by the end of next month if everything goes right. Otherwise, I suppose we just got the we probably just would expect moving up to 0.07 and then coming back down again. On to Greatland, where we're looking to see whether the stock is responding to the rise in gold. So far there has been at least a token rise here. What's interesting is that we temporarily went down to new lows near the 5.5 pence area, which is quite shocking given that obviously gold is at the highs and record highs, so one would expect something to happen here. But at least we have rebounded and back above the February support there around 6.25 pence we could head up to 7.2 pence on the top of that post-February triangle that I've drawn there with the red resistance line. The big break, I suppose, if you're cautious and waiting on this, would be a break of that falling wedge from November around 6.5 pence. That would suggest that the 5 to 6 month decline, or at least 5-month decline that we've had, is finally at an end. But really strange that the shares are at that level. On to one of the winners of the week, which is coming up next. If I can type out the right letters, Gelion, or Gelion if you prefer. Here we've smelled that the shares were turning around. I suppose the big signal here was a break back above the old February support in the 50-day line around 18.4 pence. Above that, we were looking for up to the 200-day line around 23 pence, but actually we've exceeded that. Next level up would be a resistance line projection that I've drawn from back in basically this time last year. Top of that triangle there from March last year, heading for 45 pence, which could be seen by the end of this month. Obviously something going on there after a long time in the wilderness. Good to see that Helium 1 is following through on yesterday's coverage of the shares, just coming up against that resistance line there from back in February around 1.4 pence, looking for the 50-day line around 1.7 pence now over the next couple of weeks, if we can get a decent break of that February resistance line. Ideally, all the while we stay above 1.1 pence, the old late January support. Another interesting situation, which seems to be finally responding to the recent news flow and market conditions, is Jubilee. Here we had an uphill gap to the upside through the 50-day moving average at the end of last month, around a week ago. We've hit our first target there, which is around 6.6 pence, the top of that rising trend channel from November, and looking for up to 8 pence by the end of this month, which is the wider channel, upper parallel of that November line, by the end of April. Ideally, we stay on the right side of the 200-day moving average. 6.3 pence in the meantime. We haven't been above that 200-day line for well, basically since 2 years actually, so that's quite an achievement to finally change that trend. So hopefully Jubilee shareholders are going to have a better 2024 than they've had in 23 and 22. Moving on to a stock which was mentioned by a Twitter follower, a very keen one, which is Microlise. I've interviewed the company a while back, and very impressive it is too. Very encouraging to see a decent company like that, and you can look it up, see exactly what they do. But here on the technicals, we've had a gap to the upside back in January, another one to start April, and just shy of our previous target there, £1.57. Hopefully we'll get that in the next session or two. Above £1.57 on an end of day close basis, looking for up to £1.84, which could actually happen as soon as the end of this month. Ideally, we stay above the £1.40 level, which was the old March resistance. But that second gap to the upside suggests, unfilled gap to the upside suggests that a decent re-rate is happening there, and maybe one or two serious investors are backing that situation. Orosur has been one of the winners of late, and here we've sort of nudging our first target there, 4 3/4 pence. Next level up as high as 7.5 pence, which we're looking for perhaps as soon as the end of this month. That'd be quite a coup. Ideally, we stay on the right side of 4 pence ahead of a move towards 7.5 pence. On to RUA, which was a previous winner earlier in the year. Obviously a big winner back in November. Current situation is that we've got a bear trap from below the March support there around 9.4 pence, and looking for the 200-day moving average at 16 pence. Hopefully that'll be hit relatively easily over the next 24-48 hours. The target above the 200-day line at 16 pence would be for the shares to fill the gap up to 19 pence, the top of the November gap down, and I would also imagine that will be hit relatively quickly and easily, given how strong the last both the last two sessions have been, and obviously we've had a bear trap effect there as well. On to Upland, which I know has its many fans, and they should be pleased this week with a break of the 50-day line, 3.3 pence. Above that, we've been looking for 5 pence by the end of this month, and hopefully we'll get that even before the end of this month. Nice RSI rebound off neutral 50 as well, helping the cause. But the key here is staying above that blue 50-day line. On to the last three. First one is URA Holdings, where we're on the edge of our seats, or some of us are, waiting for the emeralds to arrive. The rising trend channel there from November, top of the channel there up to 2.8 pence, and we're looking for that by the end of this month, with or without a fistful of emeralds from that company. The upside value, certainly while we're above the floor of the rising trend channel there at 2 pence, above 2, looking for 2.8 on URA. Onto a stock which has been slightly in the wars of late, Union Jack, and here the key charting feature there, that gap there from last month, the top of the gap there at 16 3/4, and we right on that gap now, so we filled that gap. Want to see an end of day close above 16 3/4 today or on Monday, and then that could mean that we head up 21 pence as soon as the end of this month. Finishing off with the Westminster Group, which in terms of degree of difficulty has been rather difficult in the recent past. The reason for saying that is that the shares just have kept getting sold into, but not anymore. We've had our first target hit there at 2.1 pence, and above that looking for the upper parallel of that old February 2023 resistance line as high as 2 3/4 pence over the next week or two. I understand there is some news expected there. If everything goes well, then we would expect much more than the 2 3/4 pence area. The next level after that, really towards 3.5. So let's see if Westminster can cheer up its holders. That's it for me today. More updates over the weekend.